We are positioning ourselves for the markets going down once again. Sort of some years, in fact many years, it's sell in May and go away, although it could be April, it could be June. So we're in position. Last year we didn't because there were very positive astrological factors, so we didn't go short. So we believe that the markets will be down over the summer.
Hello everyone and welcome to another edition of Triangle Investor Interviews. I'm your host Lucian Valkovic, and before I announce my guest, just a reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy, sell shares, products or services. Always do your due diligence and consult with your financial advisor. And my guest today is Henry Weingarten, Managing Director for the Astrologers Fund, which employs astrology as the primary analysis a tool to manage investment fund and to advise the institutional investors and money managers worldwide. Thank you very much for joining me, Henry. Welcome.
Thank you. We're pleased to be here.
Yeah, same here. I really look forward to talk with you. It's a bit different. You're a bit different guest, and this is a bit different format than my usual. So definitely I'm looking forward to this. Like I said in the intro, you are known for the work with the Astrologers Fund and your definitely unique approach that combines the astrology with financial forecasting. So my first question, how did you develop this methodology and what convinced you that it could outperform traditional market analysis?
Well, first of all, before I was involved in markets, I was a professional astrologer. And in 1987, a friend of mine, Charles Harvey, sent me a forecast about the 1987 crash a year in advance to the day. And when it took place, at the time I had a bookstore, a publishing company, a school, subsequently a computer company. And I was reading an article about someone called Andy Krieger, who had just made $600 million for his bank. And he was very upset that he only was rewarded with $6 million. All of a sudden I'm reading this, I said, wait a second, I'm an astrologer, I make predictions every day. I can do this. I started spending the next 2 years, developed a specialty, which is financial astrology, which is a little bit different, just like medical astrology is a specialty, etc. And I was fortunate because at the time I had an account at Merrill Lynch, and we had a company called Astrology Services International, ASI, but which we called ASI Computers, and the person at the world headquarters there, his wife happened to be very interested in astrology and healing, and because of that he took my account, which was $1 to $2 million, which was far less than all of his other accounts. And we developed, a mentorship in my case and a development with him. And then I decided, well, how am I going to establish my reputation? The crash had already happened. And at that time, everyone was losing their shirt shorting Tokyo. For like a square inch, it was like $1 million. So I looked at the horoscope and I made forecasts. It was about 2 years out. We were off, I think, a couple of days. And then we made several other forecasts. And then we went on from there. As a matter of fact, I sent it out to 100 press organizations. Barron kept it. And when it happened, they said, this guy called it, and then we were off to the races.
That's a great story. Can you walk us through the specific instance where an astrological insight led to a successful investment decision? What was the outcome?
Okay, well, first of all, let me just say that just like if you do fundamental and technical analysis, both of which we do, you get better results if you do both. We believe that if you include astrology, you get even better results. Okay, that's the number one. So it's not that we don't do fundamentals and technicals. So if we want to give an example, well, let's just take the current time, which is always the best, rather than, because we have all the history on our website, on YouTube's. What is going on now? And from an astrology viewpoint, we have a couple of aspects. One of which is the Jupiter square Saturn, and another is a Saturn-Neptune conjunction. Now, what the hell does that mean? Okay, so let's take the first. If we go back in the last couple of months, Jupiter and Saturn were the two big planets that had to do with finance and with economics. When they were in square positions, it means it was being challenged. And if you look at the last two times the market was down, you will see it was down. Now it's coming up again this month, and therefore we are positioning ourselves for the markets going down once again. Sort of some years, in fact many years, it's sell in May and go away, although it could be April, it could be June. So we're in position. Last year we didn't because there were very positive astrological factors, so we didn't go short. So we believe that the markets will be down over the summer. That's number one. Number two is the Saturn-Neptune. And Saturn is why the markets and the investors are seeing fear and uncertainty, because fear is Saturn, uncertainty is Neptune. I could have said this 10 years ago, so it's not like we're saying it now. And this is a rock on a cloud. The two examples we give is the fall of the Berlin Wall, which is one case. Another, for any of you people that know mining, the Bre-X disaster, which we called 2 weeks before it happened. So these are two aspects that we can see from a top-down viewpoint that suggest the markets will be, let's say, severely challenged. On top of that, you have to look at Trump's horoscope, because anyone will tell you today that unless you follow Trump, you don't know where the market's going to be up or down. Tariffs on, tariffs off, etc. And a lot of this, in fact, we predicted in 2016, a year and a half to advance, that Trump would be the U.S. president. And everybody didn't even know who he was. It was like a joke at the time. But he had such a strong indicator. So you look at his horoscopes and you get a sense of where markets are going. And likewise with gold, silver, copper, etc. Now, it's not the only influence. I don't want to say that it's a magic bullet, but we can identify 20 to 30% of market surprises. And that's very profitable.
That's great. So what planetary alignments or astrological events do you see as most significant for global markets in the next 12 months, and why?
Okay, the most important thing to think about, and again, you don't have to be an astrologer to know what I'm about to say, we just know it sooner than anybody else, is that we're going into a global slowdown and we're going into a recessionary-like environment. In fact, it is a recession, but it's very interesting because in the United States, about 2 years ago, we had both Japan and the UK had 2 negative quarters of GDP, and they were in recession. The US had 2 negative quarters of GDP, and we weren't in a recession. So, but in any case, there's no question that there's a slowdown coming. So we're switching from stagflation to where people will be slowing down, more bankruptcies, etc. One of the times, the recessionary times, is this summer. The next one, which is almost definite, will be the winter of next year. So that means that as we get to next year, they want bonds to go down in the U.S., but they're not because we have inflationary pressures. But as we get to later this year and next year, the bond rates will go down because we'll be like the rest of the world, slowing down. So that's one example. But again, it goes for different things, whether you're talking about gold, silver, copper, etc. For example, I'm a Leo, so I love gold, but at gold at 3,400, 3,500, much too expensive. We're short. Silver now we were short at 34, got out. It's coming into 38. We're going to be 38 to 40. We'll be shorting it again. However, we like gold stocks and we like silver stocks because they're way undervalued. So we're doing a hedge where we're selling gold and silver, but buying gold and silver stocks. If we're wrong and gold and silver go up, we'll make more money because in an up market, good stocks go up much more. If we're right and it goes down, at a certain point, value investors will come in because gold and silver stocks are trading as if it's 2,200 gold and $22 silver. So whether we're right or wrong, we make money. When I first started out for the first 10, 15 years as an astrologer, I was only interested in being right. I was not interested in making money. And I'll give an example of that. We predicted the first U.S. Mideast war 2 years in advance. We were off 4 hours. That's pretty good, right? We didn't know about nighttime bombing at the time. Now, what happened was everybody who thought the war was going to happen was short the market. Everybody who didn't think the war was going to happen was long. War takes place within 4 hours, 2 years in advance, pretty good forecast. And what happens? The market goes up. Why was that? because people said, oh, this is an easy war. It's going to be over quickly. So we were 100% right on the forecast. Didn't make money. Actually, we didn't lose money because I was trading with a very experienced trader rather, and he knew to trade volatility. So we were buying volatility at the same time. We didn't lose money. And we had made money the week before or 2 weeks before on the big oil call. We were short at 149. But the main thing was I was right and lost money. Now, as an astrologer, I was very proud of myself that I had a great forecast, but for some reason, the people I was working with, my clients weren't as happy that they lost money or didn't make money. So it took us a long time to realize, because being a Leo, I love to be right, that it's important to make money whether you're right or wrong. But you make more money if you're right. So a professional, we always, like every professional, we try to make more money with less risk, and that's the game. And astrology is a behavioral psychology and allows you to make more money if it's employed properly.
How do you adapt your astrological models to account for unprecedented events like geopolitical shocks or technological disruptions?
Well, first of all, some of that is forecasted. I'll give a perfect example of forecasts we gave in the 1990s. We said roughly, and this was based on the Jupiter-Saturn cycle, roughly between the year 2000 and 2020, the world was going to be more globalized, telecommunications was going to be more important. We then said from 220 to 240, the reverse is happening. There would be deglobalization, more nationalization. That was made 40 years ago, and it's obviously taking place both in US and Europe, everywhere else. I'm sorry, you have to repeat the question because
how do you adapt your...
Oh, how do we adapt? Well, first of all, many times we know it. What you call a surprise may not be a surprise. It has to do with the planet Uranus. That's, for example, that's a very strong planet in the horoscope of Trump, and Trump, as you know, is very surprising. One of his strengths, if you like, or weaknesses, and I think it's a strength, is you don't know what he's going to do unless you're looking at his horoscope. So the point is, not all those surprises are surprises. And if you look at if you go to my website and look at the history of what we've said, so-called surprises are not always surprises. Now, there are times we are surprised. We're not, as I said, 20 to 30% of the time. The rest is it's how well you're hedged. For example, if we talk about what we're going to do for the next year, we believe that the markets are going to be challenged. They're expensive. They're not as expensive as they were, but they're certainly expensive. So we want to be long short, which is as professionals we can do. How long and how short we are depends on where we are, what month, where the markets are, and of course technical analysis is extremely important. Right now we're trading in the 6,000 on the S&Ps, and that's an important pivot point, if you like. It's an area we're developing shorts on. But sometimes you're surprised that you deal with it. You don't have too much exposure. I used to deal with people, believe it or not, that were right 90% of the time. 90%. Guess how much money they made?
Yeah, 90%.
No,
Great.
You guessed wrong. They made nothing. Because on the 10%, they were so badly done. When I train traders, we do three things. The most important thing is not what's the market going to do. The most important thing is money management. The second most important thing is what instrument are you using? And the third is where is the market going? Because when I started out, I used to know people who had no idea where the market was in the beginning of the day, and they made money because they just watched what was happening. So it's with money management because if you have exposure. We did, for example, like many people, did a test with a former partner, and we took $50,000, turned it into $2 million in 1 year. Incredible, right? But the problem was the risks that he was taking, and the next year they lost it all. And I used to know people who would take 10,000, turn it to 100,000, the next year lose it. Money management is much more important how you deal with it. Again, if you're doing speculative capital versus wealth creation or wealth preservation. So it's a tool that can be used. It's not a perfect tool. When things first started, and the 1987 crash, which had been predicted by other astrologers as well, everybody thought, oh, let's go to astrology, we'll learn a lot. And I was even on a channel called FNN, which was Financial News Network. We'd have about 20 astrologers on, and half would say it's going up, it say it was going down. It was like the regular news, and it didn't work very well. So eventually fell apart because it's a specialty area, and everybody thought, oh, I'm an astrologer, I'll do it. But the point is, it has its own
Sure.
studies, and that's why we were an RIA, CTA hedge fund. In fact, we have on our website, we have a Financial Astrology 101, which deals with the issues. Okay?
We will leave the website link in the description of this video. Astrology aside, what's your take on the current state of the U.S. economy?
I prefer it to elsewhere. We're a very strong country. Been living beyond our means, selling the silverware for the last 30 years. I believe we're more or less on the right track, but there's a lot of pain to come. One of the main themes is distressed investing. I've gone to distressed investing conferences. In the last 2 years, it's been champagne and caviar, and they're looking for a much better this year and next year. So companies that have money, that have income, not too much debt, are going to do very well. But unfortunately, there'll be more and more bankruptcies. So it's going to be rough. It's a shifting time, but we've been living beyond our means to a large extent. And it's still, I believe I read something yesterday, I don't know if it's 100% true, but 70% of the world's stock market is really the U.S. market. So it's the place to be. It's still the most liquid, relatively honest, not perfect by any means, but certainly compared to elsewhere, much more honest. So it's a good place to be, but it's going to be very difficult as we shift, I hope to a more realistic situation. But we're a very rich country, tremendous resources, lots of good people, but we've had a lot of excesses that are going to be problematic. Now, if we talk about the bond market, which is usually how people think about that, we think for the moment about 4.5 is about right. But as we get to August of this year, and especially as we get to winter of next year, then the bonds will go the other way. Right now, there's the issue of July. Will they pass these things or not? If they do, the bonds will react negatively. But then later, because the economy will be slowing down and there'll be more unemployment, they'll go the other way. So it's a seesaw environment.
Yeah, Henry, what's the single biggest market trend you are seeing for the remainder of 2025, and how can investors position themselves to profit?
Okay, there are two things. We suggest special situations. Now, there are two types of companies out there that we like, that you don't have to worry about. The first type of them is those companies that make money regardless of whether the economy is good or bad. So we have a number of companies like that. One we're recommending, for example, is Acme United. That's a company that's a manufacturer, global. Traditionally, he's benefiting from the onshoring of U.S. manufacturing, because you always want to see what are the big trends, and can you get ahead of those trends. They're doing that. They make a lot of money as they've been buying up companies, bankrupt companies, but also they're being re-rated because traditionally they were a scissor company, a manufacturer of supplies, and now they're a healthcare company. They do things like in industrial plants, you have to have a certain amount of supplies. They measure them, they supply it, they're always there. So they're being re-rated as time goes on as a healthcare companies, which gets a much higher multiple. So they've got several things going ahead of them. It means you'll get 25 to 50% over the next 2 years. That's one type. Or another one which we were plating was CalMaine, which is CALM, C-A-L-M. It's a little bit past that, which is an egg manufacturer, the largest egg people in the United States. And remember, we said that in the year, everything now in the market is based on November 2026. Well, there are three things that Trump promised. One is lower egg prices, which we can actually see in the stock already. Another is lower oil prices, and we're seeing that as well in terms of gasoline. The third thing is lower bond prices. He's not going to get that till the fall or next year. So we want to see something with those type of trends. The other special situations we like are high risk. Things that can go up 2 or 3 times, but you have to be careful and buy them in a batch of companies, 5 or 10, sort of like a private equity firm, because any one may not go anywhere. And I'll give an example of one we just saw the other day. I'm not saying to buy it now because our view is you should buy things on pullback. I'm not buying very much now outside of some gold and silver stocks, which I'll give you in a second. And what it was, it's a company called Xena Tech. They do drones, and obviously with what's going on in the Ukraine, you can see drones are very big. What they're doing unique is it's drones as a service. So if you wanted to do something, rather than buying the drones, training the people, you rent it for a short amount of time. It's a good model. So they presented at a conference recently. They were doing 1.5 million shares a day. After the next day, 10 million shares traded, and it doubled. Of course, it went up to like 650. I was at the luncheon with them. I said, it's a good thing you're having me here because I short the stock here. It's going to go down right down to 450, which we did the next day, but it went up 100% first. So you have to sort of watch it. So you want to take something ahead of the trends. Now, for your public that you don't have to worry about now is the gold and silver space, because for multiple reasons, gold is doing well, but I think it's going down, by the way, but it's still way overvalued. For us, it's worth $2,600. Silver's worth about $28. It's trading at $36. But there are a number of companies. For example, we had the company Mag Silver, which was just bought out, but at $2.5 billion. But the one we're recommending today, which you could buy now, is called Vizsla stock, VSLA. And the reason we like it, it's very high grade. Now, at the moment, the IRR, when they build their mine, is 100%. Now let's take the down case, because we want to see what if gold and silver goes down to $22. If it drops that much, their IRR is 70%, which is incredible. It's that rich. Depending on whether you think gold's going to go or silver is going to go up to stay at 40, if it is, the stock doubles or triples. If it drops 40%, the stock goes up 25 to 50%. So there's an example. Another type of stock is royalty companies. Royalty companies work because they only receive income. They don't have expenses. There's a little bit less upside, but the downside is well protected. So there are a number of companies like Gold Royalty, like EMX Royalty, and they can see this on our website. They will also do well. So you want to see, and of course there are others you can choose as well. So you choose something that will do well in a down environment. As I said, we think it's sell in May and go away, which we think the markets will be lower by later in the summer, and then we'll be buying. So it depends.
What about commodities like uranium and copper?
Okay, all right, let's deal with copper first. When we were shorting at 525. Basically, if you believe, as we do, we're going into a global slowdown, you're not buying copper now. If you're talking long term, where's copper going to be in 3 years? Yeah, copper is very good. But we would rather buy it much lower. And we were buying it at 380, et cetera. So yes, copper companies are good. If you're a big investor and have a long-term horizon, yes, but I would wait for the recession to be here, and then we have a whole list of copper companies we like. Uranium obviously is doing well thanks to President Trump and others. I don't like it for a different reason, because I'm a very traditional SRI investor. I do not believe it is healthy for the environment. To me, it's a 10,000 year, what should we say, problem. And also it's an issue, it's a terrorist wet dream. So I don't like uranium. But is it profitable? Yes. It's just like military. There are many things that will do well in the military, and I'm not saying we shouldn't have a military. Obviously, I don't believe in make love and instead of and not war. But it's not something I choose to invest in. To me, you want to invest. To me, your portfolio is like your clothes. It's what you want to wear, and it's not where I want to give my money. But I'm not against it, so it's okay. It will make money. Although most of the money's already been made, quite frankly, in that.
Yeah. How are your views on AI? How is the rise of AI and algorithms changed the way of the approach, your approach to investing?
Well, it hasn't, first of all, although we're just starting to use it instead of Google search, which is horrible. I mean, Google search, by the time you get to the ads and it doesn't go in it, I'd be more concerned if I were Google, because if you go into any of the AI things, they find things better, much better than he does. Obviously, they make money. We have a couple of companies that are like that, but it's a little bit like the internet. Most of this is hype. Let's face it, it's not intelligence. The problem with AI, and by the way, we were doing this 30 years ago because it's really what's called machine learning, but it's not sexy to say we do machine learning. The problem is your data. So if you're choosing it from an area where you have your contained area with your data, it gets excellent results. If you're doing it on the World Wide Web, you come up with sometimes crap, to put it mildly. Garbage in, garbage out. So yes, it's increasing. It's like the internet, but it's a label that people go to, so you make a lot of money, and we can participate in that trend. And it is an important trend, no question, but not if we go 5 years from now, it's like the internet. Not all these companies are going to exist. They're great for raising money. We're doing it as well. It's an important trend, but a lot of it is hype.
Yeah, there is a lot of hype.
And that's okay if you play momentum. I'm a cosmic value person, which means I want to have something which I know that if I'm right or wrong on my timing, I'm going to still make money in the long term.
Yeah, that's fair enough. What's the biggest mistake you see retail investors making in today's market?
Oh boy, the biggest mistake. Well, I think meme investing is ridiculous. It's a game. If you play the game well and if you don't drink the Kool-Aid, look, you can make a lot of money in a lot of trends. If you're in early and get out early, and you have discipline, it's fine. The problem with it is they don't know how to sell. I mean, the biggest mistake that's been for 40 years, there's two big mistakes that we used to see as brokers. Number one, their money management. They'd go all in and say, I remember in a company we did that was on manufactured housing, it should have been multi-billion-dollar company we invested in, eventually went bankrupt because of the management. But I'd recommend it to some people, and I know people put their whole IRA in it, which I could not believe. I mean, it was a speculative stock. So their weighting is not correct. You have to be somewhat diversified. Now, it is true that you make your biggest money in wealth creation in one or two things, but you also got to know what happens if you lose. So one thing is money management. But the biggest thing, they don't know how to sell. I know people who would get them in a stock, be $1. Goes to 5, 10, 20, we're exiting. Goes to 40, they don't sell. Goes to 30, don't sell. Goes to 20, doesn't sell. Goes to 10, they bought $1, goes back to $1. I mean, it's just poor money management. So I think it's a lack of discipline. That's the biggest thing. But the main thing is to learn how to sell. Many of them are excellent at buying, coming in a trend early, if you come in ahead of people, but you have to have an exit strategy as well. Now, you can have a long-term situation, because you could say, I was an Apple dealer when it was Apple who? Nobody, that's how far back we go. But if you never sell it, sometimes these things disappear. So you at least should if a stock doubles or triples, you should at least take your initial investment out. If it goes up 10 times, which some of ours do, like we have stocks that triple and then they go right back down again, because we're traders as well. So if you don't do anything, you're not going to have results. So have some discipline, whatever it is. Separate wealth creation from wealth preservation, because you should have a core portfolio that's night and day, you don't care. And then if you want to play, play. If you don't want to play, don't play.
Couldn't agree more. And I would add one thing: today's investors are more of a gut instinct investors. So, my question to you: how do you balance gut instinct with hard data when deciding where to invest?
Okay. Well, we've been in this space almost 40 years now. So, like in any field that you've experienced, you have a flavor. Now, in the gold space, which is we're very well known because we have a world-class record. We can look at the chart, we can look at the stock during the day and say, this is where it's going next. And it's like, I don't care. I don't need to look at a chart. I don't need to look at the horoscope. I just know. Not every day, by the way. There's some days and times we know. Most of my mistakes have always been because I do that, and I'm not looking at the charts, and I'm not looking at the astrology. They always say, don't fight the Fed, right? I fight the Fed. Sometimes I win, sometimes I lose. But a bigger thing is don't fight the cosmos. And I sometimes do, because I'll say, this is nonsense. But the point is, it doesn't matter what I think. It took me 30 years to understand this very old saying. The stock market is like a bathing beauty contest. It's not who you think is the prettiest girl, it's who other people think is the prettiest girl. Now, eventually fundamentals matter, but so I will look at something and say, this is total nonsense, but it will still go way, way up. So I learned to sort of take time if I'm not looking at the charts, if I'm not looking at astrology. On the other hand, sometimes we're intuitive and we do very well. We just say, but then they're not big bets. So if I go against my own work or fight the cosmos, as we say, then I make small bets. Sometimes I win, sometimes we lose.
Very well said. Henry, how can people reach out to you?
Well, the easiest thing is to go to our website, fund.com. And we have a lot of, we may decide when we grow up. People ask me, what do I do? And I say, maybe when I grow up, I'll be an influencer. So we're about to, like, when we do our webinars, we get about 30,000 people now, but we may want to raise it to 100. So if you go to our YouTube account, Henry Weingarten, or the Astrologers Fund, I think there's some great material. I agree with 95% of it, because sometimes we're wrong. But the main advice is to, one of two things. You've got to decide, do you want to be active or passive with your investments? Do you want to just do some indexing and walk away? Do you want to have fun? You know, some people are doing this for fun, and that's okay if it's fun money, which you can, like, you know, people say, don't you like going to Las Vegas? I said, why do I have to go to Las Vegas? I'm in the market every day. I don't need Las Vegas. It's too dull. So it depends on what you want to do. Do you want to be active? Do you want to be smarter? Are you doing it to make money? If you want to do it to make money, then you better learn the game, because it's not what you think it is. It's not about making you rich. It's about many things, but when we train traders, we have to understand one of the main mechanisms of them is to the transfer of wealth from the working classes to the upper classes. That's not the only purpose of it. But you got to understand, it's not to make you money. It's to make them money. And it's like betting with the house in Las Vegas. They tend to win over time. So you've got to decide what is the purpose of your portfolio and to have some discipline in it. But again, it's Henry Weingarten or the Astrologers Fund. We have a lot of material there.
What can I say? Great chat, Henry. Thank you for coming to my show.
It's my pleasure.